Hi there. What if the stock price of AMC, which is around $14, rebounds to $500 as it happened in 2021? How much money will you make? Well, your return may be over 2000%. So that will be amazing if you are invested in AMC. Now, that might not happen again. The stock price may rebound to $50 or more. But there is also risk. This business may go bankrupt. And in this video, you'll find out the opportunities and the risk. So let's begin. You can see in this image the analyst estimates. The revenue is expected to increase from 3.9 billion to 4.8 billion by 2025, and their losses are expected to improve from a loss of 900 million to a loss of around 200 million. So that may be an improvement. Now, if you look at the last quarter results, you can see that they reported a profit of around 8 million. So that's amazing. And the revenue grew by 15% compared to the last year, 2022. And if they continue this way to make this business profitable, then the stock price can really rebound from the current level, from $14 to go to $50 or even more. But there are other things you should be aware of. Now, if you look at their operating metrics, for instance, their attendance, it has increased by 12% year over year. Most of their growth came from the US, so that's a good sign. Maybe you know that AMC has around 900 theaters and over 10,000 screens. And they make money from admissions, food and beverage. They sell tickets and food, plus other services. For instance, they also sell merchandise. Now about their earnings, as I said, they reported 8.6 million. If you look deeper, you'll see that their operating income was over 80 million. But because they have huge debt, their net income was lower, around 8 million. However, if you look at their free cash flow, it was minus 62 million. So you can't rely too much on their earnings. It's better to focus on their free cash flow, which was a loss of 62 million. Anyway, this is also an improvement. Last year they have a loss over 100 million and now only 62 million. So it's an improvement. If AMC keeps reducing its losses to become profitable and also the free cash flow, then the stock price will rebound. But we have to be aware that they have a lot of debt. If you look at their total liabilities, they have 11 billion. And most of their liabilities are the long-term debt, which is around 4.8 billion. And of course, they also have some lease liabilities, around 4.1 billion. So because of this huge debt, they will face more problems in the future. Be aware that this is a declining business. Not many people will go to theaters. They might watch Netflix at home or do something else. However, they still have some clients. As you can see, they made 1.3 billion revenue, and some people like to go to theaters to enjoy that experience. But what I want to say is that this business won't grow a lot in the future. So you have to be aware of their growth rate. It's a declining industry and you won't see a lot of profits. Of course, if they can get rid of this debt, they may make some profits. Another problem you should be aware of is on the short term. As you can see, their current liabilities are much higher than their current assets. They have 1.5 billion in current liabilities and only 700 million in current assets. So they will need a lot of money. And they have two options: to take on more debt. Of course, now the interest rates are quite high and their costs will be higher. Or the second option is to issue more shares. As you can see in this image, if you look at the number of shares, it has increased a lot in the last 3 years, from 100 million shares to over 1.4 billion shares. So that's a lot of dilution. And that's why also the stock price has declined a lot, over 80%. And as they will need more money in the future to fund their current liabilities, they will continue to issue more shares. As the market cap is around 2 billion, they will be able to raise more money. That will help them to survive. So there is a huge risk with this business. It might go bankrupt anytime. And you have to be aware of this risk. Of course, if they can turn this business around to become profitable and have some free cash flow, then the stock price can rebound. As I said, it might go to over $50. Now, if you want to value this business, you can't use their earnings or their free cash flow because they have only losses. You can try to value this business based on their revenue. For instance, first the risk. Based on the analyst estimates, the future revenue, the fair value may be around 1.8 billion if the revenue doesn't grow more in the future. As this is a declining business, they might make less money. So this is the risk. However, as I said, they have a lot of debt, over 4 billion. And as they keep issuing more shares, you also have the risk of dilution. And if they can raise more money, then the risk is that this business can go bankrupt anytime. So you have to be aware of the risk. Don't focus on what the market expects. Look at the risk first. Now the upside, the great scenario, if they can turn this business around to become profitable, then the reward is that the fair value may be around 7 billion. Or if you want the fair value per share, that may be $45. So this is a possibility. AMC may rebound, but there is high risk and you have to be aware of it, especially their huge debt and also dilution. In the normal case, where AMC may grow a little, as the market expects an increase in revenue, the fair value may be around 3.6 billion or $22 per share. So the current price, you may have a double if revenue keeps growing more in the future and their losses improve, or they may make some profits. But again, as I said, there is huge risk with this business, especially huge dilution and their huge debt. So it's up to you whether you want to take this risk or not. And if you have any questions, please let me know in the comments.